For your audience, I like to explain a mobile home park is kind of like a giant parking lot. Instead of parking cars in each one of the spaces, you park a home. And instead of there being nothing but white lines in the parking space, there's obviously space boundaries, but there's also utility connections for water, sewer, gas, or whatever the utilities are. Whoever owns the home takes care of all the maintenance on the home. It's their home. They actually own it. So they pay us a monthly fee for the parking space that their home sits on. And we're in charge of the roads and all the common amenities like lighting or common landscaping, or if there's a pool or clubhouse or those kind of things. So yeah, our maintenance is substantially lower. The expenses in a stabilized mobile home park, stabilized meaning 100% occupied. There's no vacant lots. And they're all tenant owned. Expenses can get down in the 30% of gross range.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success. How you doing today? Scott Kidd, the Yacht Captain Investor Podcast. Today I have a new friend of mine, Jack Martin, who focuses on mobile home parks. How you doing today, Jack?
Doing great. Nice to be on with the Yacht Captain.
Well, thank you so much for being here. For the people that don't know you, just give us a little intro on yourself and a little background so they can get to know you.
Well, I'll share some fun facts that'll be memorable. I'm one of 17 children, so that wasn't my choice. I just was lucky to be born into a large family.
Nice.
I live in Phoenix or Scottsdale, Arizona. My partner and I started buying mobile home parks a little over a decade ago. Nice. We own about 1,800 lots and across 5 different states, and we're expanding to more. And we do eat, breathe, sleep mobile home parks.
Excellent. That just goes to show you, you do one thing well, you eventually get really good at it.
Yeah, this is true. Yeah. I've done a lot of other real estate. I was a developer at one point when I was younger, built a lot of spec homes, got into single family, did a couple thousand single family homes, got into multifamily. I thought that was going to be my final resting place until I tripped over mobile home parks. So I always looked at them stereotypically like trailer parks. Yeah. I didn't understand the stability, and I didn't understand the tax advantages, and I didn't understand their recession resilience. So, but once you own one, it's once you go mobile home park, you can't go back. That's how it is.
That's pretty unique, in that, a lot of times I've heard similar stories from people that got into mobile home parks. They were doing multifamily or they're doing other commercial real estate, and the mobile home park was kind of a side of a deal here and there, and it kind of ended up being the cash cow out of the whole thing, and they ended up getting rid of the rest of them and just kind of keeping the mobile home parks. I guess especially if you don't own any of the mobile home parks or the mobile homes, you probably are just on the land.
That's correct. Yeah. I mean, a lot of cases when we buy them, it'll come with some park-owned homes, but our goal is always to recondition those and sell those to future residents, and then we just own the land. So it's a really simple business when it's stable.
Yeah, and I having a multifamily background, I know it's usually like hiring one person for about every 50 apartments or so as far as labor. How does that compare to the mobile home parks? Is it probably considerably less, right?
Yeah, it's less because there's less maintenance. So for your audience, I like to explain a mobile home park is kind of like a giant parking lot. Instead of parking cars in each one of the spaces, you park a home. And instead of there being nothing but white lines in the parking space, there's obviously space boundaries, but there's also utility connections for water, sewer, gas, or whatever the utilities are. Whoever owns the home takes care of all the maintenance on the home. It's their home. They actually own it. So they pay us a monthly fee for the parking space that their home sits on. And we're in charge of the roads and all the common amenities like lighting or common landscaping, or if there's a pool or clubhouse or those kind of things. So yeah, our maintenance is substantially lower. The expenses in a stabilized mobile home park, stabilized meaning 100% occupied, there's no vacant lots, and they're all tenant owned. Expenses can get down in the 30% of gross range, which is substantially less than most other real estate, specifically if there's residential housing, if they're kind of a rental product. But yeah, typically we have a single manager on site and a single maintenance person on site, and that's it.
Yeah, interesting. I mean, that's substantially less expenses than say your average multifamily apartment or quadplex, fourplex, or 100 units. You're looking at usually around 50% or so, especially if it's older. And the older the apartments, the older they get. They, like the rest of us. The older we get, the more expensive we get, as we got more maintenance.
That's right.
Yeah.
Yeah. I think ours is the other way around. Like once you get it fully stabilized, your expenses they continue to decrease. So, I think it's really interesting. I used to be an apartment guy, so I was familiar with all of that. Mm-hmm. The most expensive event when I was an apartment owner was turnover. Somebody moves out. Now you got to reposition the unit. You might be able to get their damage deposit if they caused a lot of damage. But now you got to recondition the unit and you have to put it for rent again, and you might have to pay some concessions, and it could be pretty it's pretty common that the effective income from an apartment unit over 12 months is only about 9 months.
Yeah.
Whereas with the mobile home parks, once they move in, it's a permanent resident. Yeah, and if they move, they sell their home to the next resident. So your effective rent there's very little loss to lease. You end up collecting 12 months worth of lot rent every year. So it is such a stable, comparatively, it's so much more stable. That's why I said once you go mobile home park, you can't go back.
Yeah, I would think so, because I would imagine the use of the mobile home probably is about 20, 30 years or something like that before it probably requires changed out or needs quite.
You'd be surprised. Yeah, we own some parks that have homes in there that were built in the 60s.
Wow.
They're still there. It depends on who owns it and if they care for it or not.
I guess so. That would probably, and I would imagine the ones that you're dealing with, you're keeping up everything very nice, so that you're probably going to have that quality type of. You want to know the one thing that separates investors who win from investors who get wiped out? It's not the deal flow. It's not connections. It's this: due diligence. Not the skim the deck and hope for the best kind. The real due diligence. Asking the real questions like, who's the sponsor and their team? What is their experience? Does the sponsor have verified exits? What is the downside of the scenario? Are there any hidden fees? If you can't answer these questions and more, you're not really investing. You're speculating or possibly gambling. I built a tool to fix that. It's called the Passive Investor Due Diligence Scorecard. It's free, it's interactive, it's 125 questions across 4 categories. Who is the sponsor's team? What is the market? What are the financials? And what are the potential red flags? You check off what you verify, score updates live. It gives you a clear assessment to help you find out if this is the right fit for your family. It takes about 20 minutes or less, and it could save you years of regret. Use it before you wire another dollar, because the questions you don't ask are the ones that cost you the most. Tenant there, because imagine that's what you want. They're going to take care of the place better. They're going to have a higher expectation for the way the maintenance is and everything, and the grounds and the lighting, and like anything else.
I think that it's just like if you rent a car, or if you own a car, you're going to take much better care for the car that you own. You paid for it. Mm-hmm. So, if you focus on a tenant-owned business model, the tenants own their homes and they care for it because it's theirs. Yeah. So if you try to do a mobile home park business where all of them are rentals, then you're probably going to be in a spot where the tremendous amount of maintenance, I wouldn't even recommend it.
No.
and maybe those homes from the 60s wouldn't still be around. But
Yeah.
when it's a tenant owned model, you'd be surprised how well cared for. Now, most of our homes are newer. Most of our parks have, homes from the 80s, 90s, 2000s. But there are some cases where we have homes as old as, 60 years old.
Yeah, I would imagine that, when you have that type of tenant base, because if you're doing them in the rental pool, if you're renting them, that's a significantly lower price point. So you're probably attracting a significantly lower pool of people and residents there. And like you said, if you don't own it, you're not going to take as good care of it. It's like a typical condo complex. Most people own the condos, so they want the place to be kept up, nicely and stuff, and they have those fees and everything else. But that's a whole different thing. What are you seeing going forward with your business model? What areas are you in that do you like that are more favorable than others? Like what states in particular?
Yeah, so we started out just in Arizona. Once we got all of our systems and processes designed, then you really can operate anywhere. But we expanded to the Southwest, so we got into Texas and Nevada. Bought a park in Florida, so that's the other side of the country. Now we own in Nebraska, but kind of our view is from a favorable regulatory environment, favorable environment to be a landlord. We want to stay in kind of from the Mississippi River to the Rocky Mountains.
Okay.
And then eliminate states like Illinois and Michigan and Minnesota. If it's red or purple state, most likely it's more favorable from a regulatory perspective. And then rent control is either present in a lot of the Northeast, in the coastal West, and in some of the upper Midwest. But even in states like Pennsylvania, it's not present yet. But it's so noisy, it's so loud that likely you're going to see rent control in the coming years. Challenge that you have with rent control is if you purchase a mobile home park from the original owner, which is many times the case, their lot rent is going to be typically well below the market.
Yeah, I would think
And
so.
if there's rent control measures in place, you'll never be able to move the rent to market.
Yeah.
So if your pro forma would require that you have to raise the rent to achieve the yield expectation, and some regulatory change prevents you from doing that, you're not in control. So we just prefer to avoid states where those kind of things are present.
Yeah, and I would imagine in the northern states you have the climate, the heavy cold climate is probably heavier on some of the mobile homes as well. You have those.
Yeah, that doesn't really. I don't think that's an issue. So
Like, with all heavy
small.
snow and stuff like that in the wintertime, no.
There's plenty of mobile home parks in the upper Midwest that have been there for 50, 60 years, and they're just fine. So I think, it enters new things that we, didn't have present in the Southwest, which is pipes need to be buried deeper.
Yeah.
Roads need to be thicker. So there are some winterizing things that are approached differently, but those are pretty standard up in those states anyway.
Yeah. Yeah, that's true, and that's just a tip about the rent control. And this is just my opinion. Rent control is like something like a price control of any. Like if you had price controls in any other business, most of those businesses the quality of the product goes down because you have.
That's right.
The person that's with inflation going up all the time with all the other costs, you can't make the margin. You cannot. Do the maintenance. If you don't have the margins, you can't do the maintenance. You can't make the product better. You can't retain the tenants. You can't retain the residents. So that's just my opinion, but I've seen it happen in a lot of these states and places where they have rent control go in, and it just ends up, a lot of these multifamily places where it just kind of makes them not be able to raise the rents. So then, they can't do the maintenance on the property, and then it just kind of a spiral downward effect. It doesn't really help, you can't limit the price because you can't limit the costs of the costs are always going to go up. They never really go down, over time because we're always going to get some inflation when we have some growth.
Yeah, I couldn't agree more. I think the unintended consequence
Yeah.
is that the quality of the housing just goes down.
Yeah, and it sounds like a great idea, and it is something that I know the intentions are probably there that because it's tough out there if you're renting a place now, to find a good quality product for the price because everything has gone up, and it's just unfortunate. But there's what we're really seeing here is that we need an increase in supply.
Yeah, yeah, and that's the kind of the MO in, or at least in our business, is buy parks where there's vacant lots and put brand new homes in there and sell those homes, and you're effectively increasing the affordable housing supply. So the challenge that you have in the mobile home park business is there's more mobile home parks getting knocked over every year than there are new ones being built. So it's becoming an asset class of scarcity. And what's kind of interesting, so when I got familiar with the space, this is going back about 15 years now, it used to be that if you were looking at the same quality apartment complex or mobile home park in the same neighborhood, the cap rate for the apartment was about 200 bips below the cap rate for the mobile home park.
Easily.
Now it's the other way around.
Really?
So because they're so scarce, institutional capital is pursuing, they're aggregating mobile home parks at an alarming rate.
Yes.
So, and they're paying, sub 3 caps for good quality assets. So it's quite astounding. If you own mobile home parks of decent quality in a good market, they're
Still guessing your next move. As an investor, most people have no idea where they actually stand. The Investor Readiness Scorecard changes that. In 5 South, just 10 minutes, score yourself across 5 critical categories: financial foundation, education, strategy, network, and action readiness. Instantly discover your investor phase and get your exact next move. No more guessing. No more spinning your wheels. Take the free assessment now at investwithscottkid.com.
they're gold. So
Yeah.
and that's our desire. Buy those, take maximum tax benefit, hold them for cash flow, and just allow the inflationary environment to pay us back.
Well, and that's, I think, in regards to the institutional capital, you're seeing that in a lot of other asset classes where they're aggregating a lot of things, even like single family homes and stuff. They're buying up quite a few, but they still don't own a large part of the market, but, it doesn't take much time for them as they have the capital and everything. They can buy these things at a 3 cap and still be okay, whereas you and I probably not.
Yeah, I wish I had that inexpensive capital where I could pay 3 cap, but
Yeah.
turns out, my investor pool likes to make them, kind of a mid-teen IRR. So,
Yeah.
we have to be a little bit more picky.
Yeah, and that's definitely true because with just the environment now, capital is starting to come back to the table. And do you know offhand how much of the market the institutional capital owns of mobile home parks?
Generally, it's known that there's about 80,000 mobile home parks in the United States. But of those, institutional owners and not even pro owners like myself would even buy half of those because they're too small. Or maybe even 2/3 of those are too small. So if you say of the parks that are of, institutional quality means they're kind of a, C plus or better. And let's say, north of 100 lots, they probably own 40 to 50% of that stock. Yeah.
So of that, probably 40%, they probably own 50% of that. So that's basically 20% of the market. That's quite a bit.
Yeah, it's a lot. Yeah, they
That's
own a lot of
quite
it.
a
So
lot.
yeah, it
Yeah,
is possible. This is such a small asset class, Scott. It's possible that they could own more than half of the mobile home park stock at some point. It's possible.
yeah, it's
And it's
definitely
because
possible.
there's no new, I shouldn't say no new, there's new parks that are built, but it's pretty rare. I
Yeah,
mean, in the last couple of years, I think there's 10 to 15 new parks built, of institutional quality of size in the
yeah,
United States, period, like in the
yeah,
entire United States. So it's really, really difficult to build a new mobile home park because you can't get past zoning requirements. The neighborhood, the neighbors don't
yeah.
want a mobile
Not
home park in
not in my
their
backyard kind of
backyard.
thing.
Yep. Yeah,
That's
and then you have the utility solutions that make it too difficult or too like the expense of building your own private utilities typically will make the numbers not work on the development side.
yeah.
So yeah, it's just really difficult to do it. Most of the new parks that are built in the United States are built in Texas.
Oh, really? Okay,
It's just a favorable place to do it.
that's an
So
interesting fact there
yeah,
because I've known a lot of them here in Florida. They want to get rid of them. I mean, that's but everybody wants affordable housing, but they don't want they don't want the mobile home parks in their backyard, not in my backyard kind of thing. That NIMBY thing, it's
hmm
also everyone wants more power and everything, but no one wants a power plant right near them.
right.
Whether it's nuclear to coal or whatever, they don't want it right next to them. But there's going to have to be some solutions, which I think we might see maybe some smaller, more modular type things. Smaller parks. Maybe those might be acceptable to the cities or whatever. But at a certain point, building a small one doesn't really make sense.
No, it doesn't. Yeah,
Yeah.
you have to have scale. The challenge that you have in the mobile home park business from an operations perspective is that the lot rent on average is like $500.
Mm,
So compare that to the apartment world or the single family world where the per unit rent is $2,000 to
yeah.
$3,000.
Yeah.
So you have to have scale in order for it
Yeah.
to make sense. Otherwise, just think about your cost of management and typical management fees on $500. It's not even worth showing up
No.
to do that. So you have to have scale. It needs to be 100 lots or more, or it just doesn't make sense to build. So
Most
I think that
definitely.
lends into something else that's kind of unique about mobile home parks is that often with time, the land under the mobile home park is worth more than the business of the park itself. And that's why you see more of them being knocked over and redeveloped into another use
Yeah.
than new ones are being built. So it's already a scarce asset, and the pool of available properties to purchase is getting smaller and smaller by the year.
Well, that makes a lot of sense, and that's a great tip for people that's the natural progression because if it's especially if it's in an area that where near the urban growth boundary where everything grows out towards it, then all of a sudden 5, 10 years later, it's in the middle of everything.
That's right.
That land
Yeah.
is most definitely much more valuable, and at a certain point, a lot of people might get the offer that that they can't refuse, especially if a large developer or large equity company comes in and buys the land because the use case, especially if the city doesn't want it there too.
No, we have parks that we bought, as little as 5 years ago, and the land is already worth more than we paid for the park.
Wow.
So, but that's because you can go vertical. So if you have 30 acres in the inner city and your density is 10 units per acre, you turn that into an apartment or a
Yeah.
condo project, you can get, 5 times that much density per acre. So that's the reason for it.
Yeah, because then they can, yeah, like you said, they can go vertical and they can put, that and put a whole city center there with that many
hmm
acres in the middle of town. And that's, nothing against that. That's what, a lot of people want, especially with some of these high growth areas, I would imagine. Are you seeing a lot of, like some of these secondary markets grow to where the mobile home park gets kind of consumed and is kind of in the middle now? Are you seeing that
I've
happen
even
over
I've even
time?
seen that even in tertiary markets. So I think it depends on job growth and population growth, and what drives that. So a lot of it is like who's there as an employer.
Yeah.
So yeah, and when we started out in Arizona, there's parks that we thought were kind of rural, and now they're on the edge of town already. So yeah, the growth is astounding in some cases. Yes.
Yeah, it really is, because I graduated from the University of Texas at Austin, and Austin, where I went to school, going south on I-35 to San Antonio, and this is dating myself now, that was all open land, and there was a couple of towns in between. There was San Marcos in between, Southwest Texas State, he used to call, now it's Texas State, but it was all open pretty much. Now it's all filled in, and north of Austin all the way up to Dallas, that's why we're developing
Blueprint, the passive investor due diligence checklist. You found a deal, the returns look great. But before you wire a single dollar, do you know what you're really investing in? Most passive investors skip the hard questions. No PPM review, no sponsor vetting, no exit strategy. They hope for the best. Blueprint fixes that. For pillars of protection, 87 plus vetting questions, a live scoring dashboard that gives you an instant verdict. Invest, caution, or avoid. Work through each tab. Note your red flags. Review your score. Decide with confidence, not gut feeling.
the I-35 corridor, the Texas Triangle, because we see that's going to fill in too. It's just a matter of time, with all that stuff. And I would imagine you're probably looking at some mobile home parks going in along that corridor as well.
Oh, for sure. Yeah. So we purchased one up by Georgetown, so just north of Dallas or of Austin there.
Austin, yeah.
We own a couple in College Station.
Oh.
So yeah, that's that Texas Triangle that's probably one of the most obvious growth areas in the country. It's booming.
Yeah. Bryan, College Station, that was a small town when I went there, and probably one of these mobile home parks. I had friends that stayed there because it was cheap rent while they were going to school there.
Yeah,
probably one of them. But
yeah, one of the nicest parks we own.
They were where we were on that end. It was all students and stuff. It was pretty fun, So it could be, it serves a great market, especially with the way the housing affordability is, especially buying a home or renting. Are you seeing how does rent in a mobile home park compare to the average apartment rent? Is it a little bit lower? Is it competitive?
Yeah, so typically if you're renting a home, which we don't do rentals, but we do a rent credit program.
Yeah.
Where if somebody has they have good credit, they have good income, but they don't have the down payment. We'll sell the home to them on a rent credit program where the first 12 months they're just they're paying kind of market apartment rent. Call it $1,500, but half or more of that is going towards stacking up their down payment.
Oh, okay.
And they get to the end of that first 12 months, and then they can qualify for the loan to buy the home outright. Now they own it. So, but typically, kind of general rule of thumb is that the lot rent in the market is going to be half of what the apartment rent, a 2-bedroom apartment in the same neighborhood, or less. So, like in Phoenix, 2-bedroom apartments probably somewhere between $1,800 to $2,400, depending on the neighborhood. And in that same neighborhood, you'd see lot rent of $800 to $1,000 for lot rent. So it's substantially less. And that's the whole thesis of mobile home parks is the affordability is what attracts residents. Mm-hmm. And then once they move in there, the home ownership is what keeps them there. So it's the stickiest tenant that you could ever get. And there's tenants in some of our parks that were original tenants from when the park was built 45 years ago.
Wow.
And they're still there. So the turnover in a mobile home park is just extremely low. Wow. That's what lends to the stability.
Well, I would imagine it compares a lot to some of the commercial triple net lease kind of things, but probably the margins are probably better.
It's similar. Yeah. So I think another fun fact that most people that aren't familiar with this asset class are not aware of, the penalty for non-payment of rent is when you get evicted, you got to leave your house there.
Yeah.
The park gets your house.
Yeah.
So if you go back to COVID, which geez, that's 6 years ago already.
Whoa. Yeah.
Time flies, right? There was this common strategic default where if you were in an apartment complex or a rental house and a moratorium for eviction was in place, you couldn't be evicted for non-payment of rent.
Yeah.
And at the end, when the moratorium is lifted, you got evicted, but you got free rent for 10 months or whatever, right?
Or longer, 2 years, some of them,
Yeah. So in the mobile home park business, if that was your strategy, at the end, when the moratorium is lifted, not only do you have to pay the back rent and all the penalties and fees, if you don't, you got to forfeit your home.
Yeah.
So during COVID, we collected all the rent. We had about 600 or 700 lots back then, and we collected all the rent. So our apartment buddies were down 30, 40, 50% in their rent collections, and we were collecting it all. So yeah, it was, to me, it was a really big eye opener of the stability of this asset class.
Well, that's a great hint there and a great tip there for people that are looking into mobile home parks, because most definitely, if someone owns the place, they're going to do what they can to pay, because unlike if, people had the moratorium on the mortgages and stuff like that, a lot of people didn't pay and they could defer it and stuff like that. They didn't lose their house at the end of it. They just kept deferring it. And I know they did a lot of things for the tenants, but they didn't do a lot of things in multifamily, especially for the landlords. I mean, you could defer the mortgage for a while, but they just put it on the back end, so you weren't really getting a break. It just kind of it builds up over time, and especially in some of these places where people were very educated and were probably going to not pay the rent at some time anyway. Some of them were staying in for 2 years or more, so you're seeing that that can be pretty bad. But that's a pretty interesting thing, that the park gets your home after you didn't pay for 2 years. I mean, so it doesn't really make sense for you not to pay.
Well, even those who are curious, like they'd come into the office at the park and say, "Hey, I heard we don't have to pay the rent." The manager would say, "Well, that's true. You don't have to. But if you don't, here's what will happen at the end." And they're like, "Oh, okay, here's the rent." Yeah. So, yeah, it's attractive when you can take advantage of the system. Then some people will. A certain percentage of your resident base will take advantage if they can. Yeah. But yeah, it doesn't make any sense to forfeit what's worth 50 to 100 grand.
Yeah.
For $500. I mean, it's the math doesn't equate.
I made $500, for even a year, $6,000. It doesn't make sense to lose that.
That's right.
You probably got 20 years worth of crap in there, so
that's right.
It doesn't really, I mean, I know my house, that's why I don't want to ever get a bigger house. We just have more stuff. So anything I'm going to downsize. My age, I want to get smaller.
Another thing that's unique about mobile home parks that most people wouldn't know is the tax benefit. So when you purchase a mobile home park and you go through a cost segregation study, about 70% of the value of the property qualifies for bonus depreciation.
Okay.
So what the outcome of that is, for every dollar you invest, you get at least $1 of passive losses on your K1 in that same calendar year. So what to us is kind of interesting is that the LPs that invest with us, obviously their first thing that they love about parks is the stability. Like they're looking at, could I lose money here? What's the likelihood? And the likelihood's really low because mobile home parks are so stable. But the second thing that they like before the cash flow and before the yield is the tax benefit. So you invest $1 million and you get $1 million of losses on your K1 that you can use against other gains that you had in your life elsewhere. And there's cases where that can be substantially more than dollar for dollar. So it depends on the right debt and the right property.
Yeah, and
But
it depends on, yeah, it depends
that's
on
a
your,
little secret that people don't know.
yeah, and that depends on your CPA and your tax guys too. If they're really good, they know all the nuances and stuff of all this. There's so many advantages. I didn't realize that you got that much because I would imagine that if you're looking at it from just a sheer tax perspective, compared to like I know multifamily or other commercial stuff, you get, you get 20, was it 29 years, something like that, or 35 years,
39, that's 39 in
39,
commercial.
39 years. Yeah, 39
Yeah.
years. But now you can do 100% upfront at the first whack. So just as an example, like, because for the most part, you don't have a whole lot that goes into a mobile home park. You have probably the office, and then you have the office, and then you have probably the lots, some landscaping, utilities and stuff like that. What else do you have that you could offset?
Yeah, so the office building, that'll be depreciated on a 39-year schedule.
39
If
year.
there's there's a rare case where there's a manager unit, it's like a house,
Yeah.
like a single family property, that would be depreciated at 27 and a half years. But the bonus depreciation goes towards land improvements. Land improvements are going to be everything that's not a building. So it's the roads, sidewalks, gutters, the pads themselves, all of the electrical or utility hookups and pedestals and all that kind of stuff. Landscaping, fencing, lighting, the pool. I mean, just
Yeah.
it's most of the value of the property is going to be this. If you took a mobile home park and shook it upside down, everything that's still left when you turn it back right way, that's the
Yeah.
land improvements.
Pretty much
But
anything that can give you an increased value in the
yeah.
land, stuff like that.
Yeah, and if you
Interesting.
do a cost segregation study on an apartment, you'll still get quite a bit of bonus depreciation in year one, but it's usually going to be somewhere in the 30 to 40% of the value of the property. So the unique difference between mobile home parks and all the other real estate is it's substantially more than that. It's like 70% of the value of the property, and that's where you get such outsized tax benefit.
Now that's a really great tip because that's why a lot of us invest in real estate in the first place, is because of all the additional tax advantages and the long-term wealth building that you can get from all those tax advantages. And it's a hard asset, that cash flows.
Yeah.
Well, this has been really great, and I really appreciate you sharing all these great tidbits and great tips about mobile home parks, because they are a great asset class to be involved in. Now, if people want to find out more about you and more about and get in contact with you and see what you're working on, what's the best way they can find you?
Just go to our website, 5210.com. That's the number 52, and then 10 is spelled out. So it's 52ten.com. And go to the contact page. Check us out.
Excellent. Well, appreciate you sharing all your vast knowledge on mobile home parks, and glad that you shared your story and took the time today to be with us.
Well, thank you, Scott. It's nice to be invited to go look at some water in our background images.
Very nice. Very nice. Well, I'm Scott Kidd, the Yacht Captain Investor Podcast. Just a reminder that the best investment you can make is the one you make in yourself. So invest heavily in yourself. See you next time.